Hey there, I'm Russ Horn, and today I'd like to show you something called the Bollinger Band Squeeze. Now, this is a trading signal that's pretty reliable, and I'm going to set the chart up and show you exactly how this one works. Now, I'm going to start with my indicators. Under trend, I'm going to find my Bollinger Bands. Now, what I want are the standard settings, the 20 period with the 2 deviation. Now, by default, it's medium sea green, and I'm just going to thicken the line up a little bit so that we can see it on this video here. So once I've added that to the chart, I've got what's called the Bollinger Bands. There's a middle 20 SMA that runs through the center, and some deviation bands that are on the outside. And as you'll notice, the bands widen and they narrow, and then they widen and they narrow. As the market slows down, the bands will tend to narrow. They'll get closer to the 20 SMA. And as the market starts to move, we see that the bands tend to widen a little bit. And this widening and narrowing kind of forms bubbles in the bands. We've got a nice clear bubble. We've got a wider bubble here. But in between the bubbles, we've got what's called a waistline. We've got these narrow areas where the Bollinger Band is squeezing the price. And what we're looking for is the price to get wide and then to squeeze. We want to see that there's a waistline. And at that point, we're going to be looking for a close of a candle outside of the Bollinger Band, and we would take a trade in that direction. So in this area here, right in the center of the chart, we've got this Bollinger Band that is widening and then it narrows. So we have this waistline. So it's at that point that we're looking for a potential trade. Could be long, could be short. And in this case, we get a long trade as this candle closes outside of the upper Bollinger Band. It's important to note that this should occur during the squeeze, that the band should be fairly narrow at the time, narrower than what it has previously been doing. So it wants to go from a wider phase to a narrower phase. Once we're in that narrower phase, we're waiting for the close outside of the band. And this is essentially a breakout. We're looking for a Bollinger Band type breakout once the market has slowed down, giving us that narrower waistline. So we have a long trade here, and we have a short trade that triggers right in here. It just closes outside of the lower band. We've got this nice big bubble, and then the market starts to get very narrow. And at that point, we're looking for, again, a close outside of either the bottom or the upper band. And we get a close just outside of the bottom band, and the price drops down. Now, we can see these trades fairly regularly. If I scroll back just a little bit more, we've got this nice big bubble in here. The market narrows, and then we get a close outside of the top of the band. Now, this one again is just barely there. If you really want, we can go to the next one that does, and that one is absolute. There's no question about that. So at that point, we could be looking to take a long trade. Now, the way you could trade this is a couple different ways. We could be looking for, well, first of all, the initial stop loss. We could be putting the initial stop loss underneath the most recent swing low that the market made. Or for a much more aggressive approach, we could put the stop loss in a long trade just underneath the 20 SMA of the candle that closed. And that would give us our initial stop loss. Now we can let this trade run until it tags the 20 SMA. So in this case, we would have maybe a 215 pip stop loss, and we would be taken out at about 454 pips. So that is a nice long trade. Of course, some trades aren't going to work out quite as well as that. Others may work out better. Here, again, we've got a nice, it's not a huge bubble, but we've got a wider part that turns narrow. And then once we get the close outside, we are looking for that short trade. This is a movement that goes as far as just about 1,000 pips, 988 pips. Now, if this is the approach we're going to take, of course, you're not going to win every time, but use whatever tools you have at your disposal, whatever trailing stop, whatever management tools that you have. Now, this isn't the only way to do this. You can target one-to-one. So if you have a one-to-one target, just get rid of this line here. We can take a look at some of these trades. We'll enter long here as we get the narrowing of the band and then the close outside. We could place our stop loss underneath the 20 SMA, and we could go for a one-to-one profit target. And this one is nice. 1, 2, 3 candles later, we hit our profit target. So there are different ways to trade this, but this is the signal that I'm looking for when I'm using the Bollinger Bands. I want to be looking for opportunities when the band narrows and then we get a close outside the band. Again, it's a volatility kind of thing. When the bands are narrowing, we're seeing that the market is going a little bit sideways. Candles will be printing a little bit smaller. The market will be more relaxed. It'll be more in some kind of consolidation. And then when the price breaks outside of the band, we have a trend that could potentially be developing, or at least a substantial market movement. So this is the Bollinger Band squeeze.